even if you start with a very modest sum, let's say, for example, you started with $10,000, and let's say you were a very gifted capital allocator, able to compound money at high rates. If you were, doing 20, 30% a year, let's say 25% a year, that 10,000 would be doubling every 3 years. And if you went for 21 years, for example, it'll be 7 doubles. I think 7 doubles is 128. Okay, so you would have like more than 100 times the 10,000. So you would have like 1.25 million or something.
It took me 4 years to build my first 10 lakh stock portfolio. I started investing in 2018 with just rupees 19,000. And the best decision I made was to concentrate only on 2 stocks. I knew that 19,000 alone would not create a significant corpus. So I dedicated most of my salary to buying more shares and sticking to my strategy of owning few quality stocks. The COVID-19 pandemic in 2020 was unfortunate, but the market crash presented a unique opportunity for investors like me to capitalize on. It allowed me to buy stocks at significant reduced prices, and the subsequent recovery happened swiftly, rewarding those who seized the moment. Today we are in a bull run. Those with little knowledge are making money through tips, while more informed investors often struggle. My advice is to focus on steady progress on choosing stocks with strong earnings and agile business models. Let your investment compound. Consistently fuel your portfolio with your salary. And remember Mohnish Pabrai's words. Once you make money, no one will ask at what rate you made it.
So I think that there should be a couple of conditions in terms of managing money for others. Number one, you should be independently wealthy. So if you've compounded well with your own capital for some period of time, basically just the nature of compounding is that you'll be quite wealthy. And then at that point, once you're wealthy, whether you manage money for others or not becomes irrelevant, because you'll continue to compound and do well even if you never. So if you were 20 years old and you were doing this 20, 30% a year, by 41, you would have over 1 million. And by 71, you would have over 1 billion without ever adding anything to the 10,000 you started with, without ever managing any money for anyone. So my take is that the first rule should be that you should have proven that you are a great investor, and the proof would be that you'll be independently wealthy. And yeah, if you've done that, then at that point, if you said that you wanted to, manage money for others, I think that would be a relatively easy thing to do. In fact, they would find you. A lot of people would find you and want to give you money. You wouldn't even have to spend much time looking for them.